Somebody asked me on Twitter about buyback of shares and what it means. Let's take a look. Welcome back to Berich. One of Uncle Warren's famous easiest methods to enhance the value of a share is buybacks. If he loves a company, he never tenders his shares in buybacks. What is a buyback? Wipro used to do it regularly, but they will not do it now because the government of India has put a punitive tax on that. When a company makes enormous profits and the promoters and the shareholders feel that the market value of the share is not commensurate with the value of the company, they resort to do one thing. They try to change the denominator in the equation. What do I mean by denominator? Markets are slaves of earnings. So when you calculate earnings per share, what you do is take the net profits divided by number of shares. So one of the ways to increase EPS is to reduce the number of shares. Companies like Uncle Warren's and Wipro, what do this? They use their reserves and surplus, excess cash lying with them, to buy their shares back from the market at market price. Once they buy it and they have paid for those shares, these shares are extinguished normally. If these shares are extinguished, then the number of shares will come down. Thus, even if profit remains same, the denominator comes down, thus EPS goes up, and as EPS goes up, the shares of profit, the price will automatically go up. This works when shares are highly undervalued. There are some companies like Reliance which do not extinguish the shares, but keep them in their own treasury chest and sell it when the market prices go up. That is not very effective. The most effective way is to reduce the number of shares. Nirmala Sitharaman, in her wisdom, decided this is actually cheating the government and has put a punitive tax on that. And therefore, companies with this year have done less buybacks. This is totally unfair, for you already taxed the company and you are taxing the dividend. And nobody uses buyback to reward the shareholder directly. It's an indirect reward by which the market has to respond to the cue. To tax such a thing is utterly stupid. Trump has also joined the battle now. He says those companies which have availed of the bailout package now should not use buyback as a tool to enhance shareholder value. That is fair, for they are using government funds. But in India, government is neither giving a stimulus nor helping companies by stimulating demand. In such a case, what is wrong with the shareholders using the surplus reserves and surplus money to buy some of the shares and enhance its value? The government is already taxing the income of the company and the dividends at the hand of the shareholders. There is already a double taxation involved in corporate business. This is nothing but trying to tax it the third time. This government in its wisdom introduced the long-term capital gains. From the time it introduced long-term capital gains, investors have made no profits which can be taxed. This is another foolhardy move which will neither result in any taxation. This government is becoming more socialist than any socialist government of the past. Thank you for watching Berich. If you like this video, kindly subscribe to my channel and turn on the bell notification. I have given a WhatsApp number below. If you want to buy my books, you may send a message there and my team would get in touch with you. If you want to get in touch with me directly, please send a mail to berichenglish@gmail.com. At the outset, I would like all of you to press the like button. I have a young team and it motivates them to no end. If you like this video, please press the like button and give us a thumbs up signal. Once again, I thank you for supporting Berich.